Hey, what's up guys? Welcome back to part 2 of Stock Market Basics. I'm Paul McFall, and today we'll be discussing more specific aspects of the market. If you ever watch financial TV channels, then you've probably seen a stock ticker like this one at the bottom of the screen. This one I definitely stole from CNBC, so let's check it out. The upper band shows market and commodities with stocks trading on higher volumes on the NYSE, while the lower band shows stocks trading on the NASDAQ and the American Stock Exchange. Each of the symbols that you see after the names of the companies are known as ticker symbols. A ticker symbol is pretty much a placeholder used to reference a particular security when it's placed on the exchange. So when a company actually gets listed on the public market, it's got to choose a unique symbol that an investor can actually use to place orders. So if we take a look at Robinhood real quick, we can easily search for stocks by their ticker symbols. So on the other hand, stocks aren't the only securities with ticker symbols. ETFs, indexes, and mutual funds have them as well. An index is actually not a stock itself. It's created by averaging the performance of several stocks together, and is tracked over a period of days, months, and years. So for example, the Dow Jones Industrial is made up of 30 of the largest companies in the United States, such as Disney, Caterpillar, and Boeing, while the NASDAQ is actually made up of some of the largest tech companies, such as Comcast, Intel, and Nvidia. If you actually just take a look at these indices closely, you can monitor how different sectors of the economy are actually doing. So next we have ETFs, or exchange traded funds, and kind of like an index, ETFs track a very specific set of securities. Unlike an index, you can actually trade ETFs on the stock market, just like you would any other stock. Since an ETF is actually made up of multiple securities or stocks, you can actually invest in entire industry sectors such as healthcare, energy, or tech. And if you want to invest in an entire index like the S&P 500, you can find an ETF that mimics that as well. Alright, so next we have mutual funds. And mutual funds consist of money pulled together from multiple investors. And usually they're led by money managers who choose where to allocate this money in order to grow profits for its investors. There are three main types of mutual funds: equity, fixed income, and balanced funds. So equity funds only invest in common stock, where fixed income invests in corporate and government bonds to produce a fixed return. Equity funds are the more risky of the two. However, they have the possibility of producing much higher returns because they depend on stocks, whereas fixed income funds depend on bonds and mature at a fixed rate. The balanced funds have the best of both worlds because their risk falls between that of equity and fixed income funds. Alright, so last but not least, let's talk about the pink sheets and the penny stocks, which are generally defined as securities that trade under the price of $5.
Well, where are your Quotrons here?
Quotrons?
Yeah, computers.
No, we don't even need computers here. We just trade right off the pink sheets here.
Pink sheets?
Yeah, they're penny stocks. You know, companies that can't get listed on NASDAQ, they don't have enough capital, their shares trade here.
Penny stocks?
Yeah.
Some of these can be found on Robinhood if they're traded on some of the major exchanges. However, most are going to be found on the over-the-counter or OTC markets and are generally referred to as pink sheets because of the color of the paper they were published on years ago. So over-the-counter stocks are traded on non-regulated exchanges, and that's because they often trade for less than $1 and have market caps of less than $50 million. Now, while you can make a fortune from penny stocks because they're extremely cheap, it's often extremely risky because they're traded on such small volumes at such a small market cap, which makes it very volatile and very hard to profit from.
6 cents a share? Come on, who buys this crap?
Well, I mean, honestly, mostly schmucks.
Alright guys, I hope you enjoyed this video. I know we went over a ton of stuff today, so if you have any questions, please feel free to leave a comment down below. And if you haven't gotten started with Robinhood just yet, you can do so through this link, and once you do, we'll both actually get a free stock, so please be sure to do that. Until next time.